Hello, very good morning to all, and welcome to today's Daily Dose of Market Insights. I'm Kelvin Wong here again. Very good morning. Today will be the Wednesday, the 5th of June 2024. So before we jump straight into our daily dose as what's kicking on in the markets today, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so before we jump straight into the short-term technical outlook on the major stock indices, the major US dollar pairs, and the two key commodities, that means i.e. gold XAU/USD and West Texas crude oil, let's have a recap what has taken shape yesterday and today's early Asia session in terms of the economic data, news flow, and as well as the performance of the cross assets. So let us start with the news flow and economic data releases first. So yesterday we do have a rather quiet US session calendar. So not much of a important data that I want to highlight, but one key important data I want to highlight is much closer to Asia, which is the release of China Caixin Services PMI that was actually out earlier today morning time during the Asia session at 9:45 a.m. Singapore time, right before the start of our daily dose today. So this Caixin Services PMI is a bit slightly different in terms of the compilation as done by last week. They call it the China NBS Services PMI. So NBS stands for the National Bureau of Statistics Board. So that's kind of the official compilation done by the government body. Caixin is more Caixin, you know, that is the Chinese newscaster. So that's actually more of a private oriented compilation body, which consists of a more broad base of survey done across the spectrum of Chinese businesses operating in the services sector. It covers the government led we call it state-run firm. Those are the bigger boys, as well as privately oriented SME. So it gives us a better picture of the state of the affairs in the services sector in China. So basically the China Services PMI, it's rather rosy, I would say, or rather upbeat. Why? Because it continues to actually expand gradually above the 50 level. So for services, for PMI globally, be it in China, Hong Kong, Singapore, US, Germany, or whatsoever, any number that is 50 and above is expansion. This is how they compile it. So this is in a nutshell. So what you could see over here is that the latest one for May was reported at 54, way above, not say way above, 2 points above expectation of 52.6, and also above the previous April month of 52.5. So if you look at the trend or its trend, I would say it continued to be gently on an expansionary path above the 50 level mark since November last year. All right, so you look at the 5-year trend, is gradually shaping a series of higher low. So that's actually indicating to us that so far the piecemeal stimulus measure in China is gaining traction as the months goes by, which means, i.e., there is actually lower odds right now of that deflationary spiral getting entrenched into the mindsets of China consumers and business corporation, which is in a medium-term perspective is positive for the risk assets of China and their proxy, which is the Hong Kong Hang Seng indices. Okay, so this is in a nutshell, right? Then on top of this, and another data that was released earlier is Australia GDP growth for Q1. Okay, so Australia GDP growth for Q1, the year-on-year continued to actually expand, but at a slower pace. from the previous quarter, which is Q4 2023. That means last year. Last year quarter of Q4 increased at a 1.6% year on year. This time around, the Q1 increase gradually slower at 1.2%. So if you look at the trend, okay, where is it? Yeah, this is the one. Okay, it's starts to actually plateau off, plateau down. All right, over here. Okay, still in a sign of a lukewarm GDP growth, I would say, in Australia. All right, so these are the key data, economic data that was released yesterday. So right now, just jump straight to news flow. So one piece of news flow is rather important. It's related to Japan, especially on a FX perspective, the yen. Why is important? Because the yen is being used as a carry trade to fund carry trade strategy. That means a short yen, long other currency or assets that has a higher yield. So what it means that this is getting more and more evidence that Bank of Japan (BOJ) is now on a path of loosening its grip on the JGB bond market. There was actually a report news flow yesterday, according to people familiar with the thinking of BOJ, saying that next week BOJ will meet, Bank of Japan will meet, not for this time around June, they will not hike the rate one more time, but they will give the guidance to do another interest rate hike in July. But this time around, ahead of the potential interest rate hike in July, they will actually announce the monthly reduction of their JGB purchases, okay, as early as the June meeting. Okay, so over here, this is what being expected according to some of the sources. All right, so BOJ will actually meet next week. All right, let me do a count. Where was it? Okay, one second. Give me the. Let me share with the exact date of the meeting. Yep. So the two-day policy meeting will end on June the 14th. That means, i.e., that will be on next Friday, okay, right after the US Federal Reserve meeting on Wednesday. So very interesting to see how the market plays out, especially on the yen side of the story. One thing interesting over here is that based on this news flow, the JGB yield continues to tick much higher. And like I share with you later, I'll show the chart again. But meanwhile, let me have a quick recap. Those who follow our day lows very closely since last week, I do give a cautious that the pace of that dollar yen keep on appreciating since the start of this year may start to slow down. Why? Because the yen may get stronger against the dollar due to the fact of that JGB yield that is keep spiking since 3 weeks ago, and the pace of appreciation has started to increase significantly. And that boils down to, all in all, this news flow that I share right now is that BOJ now is actually removing its grip, slowly removing its grip on the JGB market. That means they do not want to intervene in the JGB market to suppress the JGB yields. So that will actually lead to higher JGB yields, indication that the cost of carry trade by using JPY, the Japanese yen, as a funding currency is no longer attractive anymore. Things are getting more costly to actually short yen. That actually potentially could see at least a short to medium term dollar yen potential depreciation instead of appreciation. So that actually plays out yesterday as well. So if you look at yesterday's the 5-day rolling performance. This is a 5-day rolling performance of the dollar pair against other major currencies. So this right now we are speaking right now. So yesterday, if those who actually joined our daily dose of market insight, in my short-term intraday outlook on the major US dollar pair, we did mention that there could be a potential minor bounce on the US dollar against other currency like the sterling, the euro, and the Aussie, which did play out exactly as expected. Over here, you look at my screen. But however, the dollar yen didn't bounce. The dollar yen continues to collapse during the European session and right into the US session, and only managed to do a retracement during today's Asia session as we are speaking. Okay, so what causes this desynchronization of the yen move against the rest of other major pair against the dollar, where the dollar yen did actually do that minor dollar bounce against the yen is because of this particular news flow, all right, that is detrimental to the dollar against the yen. Okay, so this is something I want to highlight, very important, especially going forward in a medium term perspective. Okay, if the JGBU is going to strengthen, so later I'll flash the chart of the JGBU again while we are covering the short term technical outlook of the dollar yen. Okay, so this is the news flow that took shape yesterday, and now let us talk about the performance of the cross asset classes, starting from the US stock market. So the US stock market yesterday rather positive, I would say. What we could see over here is there are more greens than red in the intraday S&P 500 heat map. So amongst the leaders, as usual, will be the one that is centered on AI driven, that is leading by NVIDIA again, which is up 1.25% to fresh all-time high, and spilling over to the rest of other mega cap technology stocks like Microsoft is up 0.62%, Google 0.4%, and Amazon 0.56%. The energy stocks, which only form a small percentage of the S&P 500, by looking at the area of the box, it could very obviously tell us visually continue to be on underperforming mode and decline yesterday due to a weaker oil price. All right, so later I'll share the short-term technical outlook of WTI crude oil. It actually tumbled and hit to our support level. We know that price action don't go vertical up and vertical down on a intraday basis. So later I'll talk more about that while we covered the short-term intraday outlook on West Texas oil. And if you look at the performance of the S&P 500 over here, what we could see is, as usual, market open weaker for three consecutive sessions since Friday, and the rally only took shape on the second half of the session. So it opened weaker, and during the second half of the US session, it continued to push up strongly and close up at the close. Right, so this particular price action behavior has been intact since last Friday. That means so far Friday, Tuesday, Monday, Tuesday, three consecutive sessions where this kind of price behavior took shape. That means open weak, but at the coming close to the second half of the US session, the market actually rallied. Okay, S&P 500, they call it that intraday V-shaped rally. Nasdaq 100. So these are intraday price movement. Okay, you see that U-shape or V-shape rally that took shape at the start of the second half of the US session. Very similar movement on the down as well. So as usual, all in all, right, all three of them closed positive, with the top performer was the Dow Jones Industrial Average yesterday, closing 0.6% above Nasdaq 100 0.29% and the S&P 500 0.15%. The Russell 2000 surprisingly underperformed by negative 1.25%. All right, so right now let us move on to the intermarket dynamics. So far, looking at the US Treasury yield. So the US Treasury yield continues to remain rather soft, I would say, by looking at, where is it? Yeah, over here. So the US Treasury yield, the 10-year Treasury yield continues to actually inch down 1, 2, 3, 4, 4 consecutive sessions of black candle, lower closes, all right? And below that 20-day and a 50-day moving average. So this is the daily chart of the 10-year, okay, 10-year US Treasury yield. Okay, 1, 2, 3, 4, 4 daily closes. All right. So right now, it also yesterday price action also broke below the 200-day moving average and the ascending channel support that I drew from the low of 1st of February this year. And right now it's actually testing this key medium-term graphical pivotal support, which is the former this medium-term range top turns into a pullback resistance that managed to survive on 16th of May. And right now price action is retesting this level. And prior to the retest, we see 4 straight bars of black candle. Okay, so this is rather bearish. Okay, so definitely we may see a bit of consolidation going forward, maybe today or tomorrow, ahead of that US non-farm payroll data, which is going to be released on Friday. Okay, 4.32%, key medium-term pivotal support. So if this support level start to give way, that means we see a daily close below it. Potentially the US 10-year Treasury yield may see further weakness towards the next support level at around 4.07, yeah, this level over here. So what it means, it implies over here is for sure a lower 10-year US Treasury yield. It implies lower cost of funding, which indirectly or directly lead to a positive feedback loop into the risk assets. That means, i.e., it should potentially be positive for equities as well. But we know that intraday basis, sometimes price move either overbought or oversold rapidly, and we know that certain point in time they don't go vertical up or vertical down, all right, on an intraday basis. It's because I'm looking at the daily chart. So if this daily price action on the US 10-year Treasury are going to inch much lower, below 4.32%, from a medium-term perspective, that means we talk about multi-week perspective, it should be also lead to a positive feedback loop to the stock market. And what it means that for the US dollar, very likely the US dollar will continue to remain weak as well. And instead, the US dollar index broke its key medium-term support yesterday instead, all right, by a daily close below this 104.20 level. Okay, 104.20 level, it broke below it. Very clearly the 200-day moving average. So if today's price action continue to remains weak, that means another daily close below 104.20 on the US dollar index. So this is a daily chart as well. So potentially we could see further weakness on the dollar index to expose the next medium-term support zone at 102.70/102.20 level. Okay, this area here. So all in all, this is being interrelated to a weaker, softer US 10-year Treasury yield, or in fact, the shorter term yield also showing similar price action as well. So all in all, it will be negative for the US dollar index. That means, i.e., we may start to see much more dollar weakness instead of dollar strength going forward from a multi-week medium-term perspective, since I'm looking on a daily chart. So like I say, intraday, when I cover the short-term intraday movement, is slightly much more different, right? Because price action react, they oscillate, right? They oscillate much more frequent. So sometimes they'll work from an overbought, oversold region, like what took shape yesterday, where we flipped to a short-term US dollar bounce on the euro dollar, the sterling, the Aussie. Unfortunately, the dollar yen didn't take shape because of that negative news flow of the BOJ that hurt the dollar against the yen. But the rest of other currencies see that minor dollar strength bounce. So this is what I mean by the much more frequent oscillation on the intraday basis, okay, when we covered those intraday short-term technical outlook here. So I hope that I can make this picture rather clear. All right, so now with that, that should sum up the fundamentals and the intermarket dynamics, all right, for today. Now let us now straight jump to the short-term intraday technical outlook, okay, starting from the FX pair first. All right, so let us now move to the euro dollar. Okay, let me expand the screen of the euro dollar. Okay, give me 1 second. Okay, so this is the euro dollar chart. So still recall that yesterday, for those who follow our daily dose of market insights, we do expect that dollar bounce to take shape. Yeah, the dollar bounce to take shape, where the euro dollar did that steep intraday slide and hit exactly at the first two support level that we highlighted, which is at 1.0880 and 1.085. These two support, and now during the US session, it managed to stage a bounce. So all in all, right, this particular pullback over here could be more or less been over in terms of the Elliott wave perspective. So this could be the potential wave 4. So what you could see here is that wave, okay, this is a little wave 1, wave 2, wave 3, wave 4. And where it stopped, right, it actually stopped at the typical wave 4 retracement, which is close to the 50%. All right, so with that, I will be flipping back to a short-term intraday bullish bias on the euro dollar, using slightly below 1.085, which is 1.0840 as my short-term pivotal support level, which is also confluence with the rising 20-day moving average, this line in red over here. So where's the 20-day moving? Never mind. Okay, I actually did it off. Yeah, this is the 20-day moving average. Okay, in pink or dark pink, all right, so we call it. So as long as this price short-term pivotal support holds on the euro dollar for today, 1.0840, we'll be flipping back to a short-term intraday bullish bias on the euro dollar. First resistance to watch will be this area here, 1.0925 / 1.0940, that kickstart yesterday's minor dollar strength bounce. Above 1.0940 sees the next near-term resistance coming in at 1.0950. Only an hourly close below 1.0840 will invalidate today's short-term intraday bullish bias to see another round of minor corrective decline scenario playing up for that dollar strength to get extended. Next support level to watch after 1.0840, 1.0810, a break below it exposes the 200-day and the 50-day moving average, acting as a support zone as well at 1.0790, 1.0770. All right, this graphical support zone over here, okay, which confluence with the 200-day and the 50-day moving average. Similar price action on the sterling dollar, the cable. So the cable yesterday, we also looking for that dollar strength bounce to take shape. That means sterling dollar setback. It hit the first support level at 1.0760 before bouncing off during the US session. So with that, I don't want to use 1.2750 or 60 here as my short-term pivotal support. Is a bit tight. So I'd rather use 1.27 because it's so confluence with the rising 20-day moving average as well, coming close to 1.27 figure level. So for today, as long as 1.27 figure level short-term pivotal support holds, we will flip back to a short-term intraday bullish bias on the sterling dollar. First resistance to watch will be at 1.2860 / 1.29 figure level. Above it exposes the next near-term resistance coming in at 1.2940. Only an hourly close below 1.27 figure level will invalidate today's short-term intraday bullish bias to see the extension of another round of minor corrective decline scenario unfolding on the sterling dollar to expose the next support level at 12670 / 12640, which confluence with this minor ascending channel support that I drew from the low of 22nd of April. And below it sees the 50-day moving average coming to act as a support as well at the 126 figure level, which is also the minor swing high, former minor swing high area of 3rd of May. So that's for the European currency. Asia Pacific currency, starting with the dollar yen. So the dollar yen yesterday, we do expect a bounce above the 155.90 level, but unfortunately the price action didn't actually bounce much. Then after that, it did that steep sell off, reinforced by that news flow, that BOJ bond purchase reduction news flow that was out during the European session yesterday. So what's interesting over here is that we see the survival of the second support level that I highlighted, which is right at the 50-day moving average, 154.60, and the price action stage a bounce. All right. So what we could see over here is that if we could go to the daily time frame chart or the higher time frame, price action looks rather toppish right now. So this high here, it could be like a mini double top formation. All right, the 154.40, 154.60 level is pretty key, and the daily MACD trend indicator is actually trending downwards, indicating to us that could be the birth of a potential medium-term downtrend, because it's actually trending downwards, but it's still above zero. Okay, over here. So what we could see over here is trend is getting weak. All right, in terms of their medium-term uptrend, that is still surviving the 50-day moving average, but the MACD trend indicator is not supporting confirmation of the continuation of that medium-term impulsive up move, given yesterday's retest at the 50-day moving average. All right, now back to the short-term daily time frame chart. Okay, so just now I offered the daily time frame chart to give us a better, longer, medium-term clarity on its technical picture. So with that, given that the daily technical chart outlook is no longer as bullish as before, so I will not be flipping to a bullish bias on the dollar yen instead. So instead, I'll be using this bounce here. this bounce could be a dead cat bounce to flip to a short-term intraday bearish bias. Key resistance level to watch for this potential bounce to start for sure will be yesterday's pivotal support level, now turns into a pullback resistance at 155.90, but I will use a slightly higher level at 156.60 as my short-term pivotal resistance. Why? Because it confluences with more technical element close to the 20-day moving average, right at the former trend line, minor trend line support from 3rd of May, now turns into a pullback resistance at 156.60. And in terms of the Fibo retracement, if I have to retrace the down moves that took shape from this Monday onwards all the way down, it actually confluenced closely with the 76.4% Fibo retracement. All right, so as long as this bounce didn't surpass 156.60, which is today's short-term pivotal resistance that I highlighted, 156.60, we will flip to a short-term intraday bearish bias. First support level to watch again will be a retest on the 154.60 level, which is important, which is the 50-day moving average. A breakdown below it exposes in first step the next near-term support level at 153.60, which is the minor swing low of 16th of May. Okay, that's on the short-term intraday basis level to watch for today. Only an hourly close back above 156.60 will invalidate today's short-term bearish bias, intraday bearish bias on the dollar yen, to potentially see a further squeeze up towards 157.50, followed by 158 figure / 158.30 next. Okay, this minor swing high here that kick-started that dollar yen, that BOJ intervention in the FX market to sell dollar by yen on the 2nd of May, this last month. All right, so that's for the dollar yen short-term intraday technical outlook. Now Aussie dollar. Okay, so Aussie dollar, those we caught yesterday, we have that intraday bearish bias. So the intraday bearish bias worked out as expected, hit the first support level at 66.40 and starts to bounce during today's Asia session. All right, which is also confluencing with the 20-day moving average. So for today, I'll be using a slightly lower level, 66.20. That was yesterday's support level for that potential Aussie dollar setbacks scenario. So given that this setback scenario more or less has already been played out, so using 66.20 for today, short-term pivotal support. So as long as this 66.20 on the Aussie dollar short-term pivotal support holds, we will flip to a short-term intraday bullish bias on the Aussie dollar. First resistance to watch 67.10, followed by the key medium-term resistance of 67.30, which is the upper boundary of the medium-term symmetrical triangle resistance that I'll show on the daily chart. So only a break below 66.20 and hourly close below 66.20 will invalidate today's short-term intraday bullish bias to expose the next near-term support at 65.90. Below it says 65.60. We also confluence with the 50-day moving average acting as a support. So very quickly, why 67.30 is key medium-term resistance on the Aussie dollar. If you look at the Aussie dollar daily chart, this is what I mean. Since 13th of October 2023 low, it has been oscillating within this medium-term symmetrical triangle configuration depicted by a descending trend line and a ascending trend line. So this descending trend line is the upper limit of that symmetrical triangle range configuration. So this descending trend line right now is confluencing with this 67.30 resistance level. So that's give me to define 67.30 as a key medium-term resistance because it's being defined on the daily chart of the Aussie dollar. All right, so now let's cover the FX market. So overall, the short-term technical outlook for the FX market is today potentially for another round of intraday dollar weakness story, potentially that could play out. Major stock indices, starting with the Asia Pacific Index, the Japan i.e. Nikkei 225. So Nikkei 225 going to trade sideways, but still holding above the short-term pivotal support that we highlighted yesterday as well, 38,290. So I'll be using this 38,290 as my short-term pivotal support. Still maintain that short-term bullish bias within this complex range configuration on the Japan 225. So first resistance to watch for today, a slightly higher level, which is this level here. Okay, close to the 50-day moving average that's acting as a near-term resistance at 38,670. A break above 38,670 sees the next range resistance coming in at 38,975 that has been preventing the bulls from breaking out since 28th of May on the Japan 225. Only an hourly close below 38,290, that means a breakdown below 38,290, will invalidate today's short-term intraday bullish bias on the Japan 225 to see a further slide to retest 30th of May minor swing low area, and this 2nd of May swing low area at 37,750 slash 600 level, right? Hang Seng Index, which is the Hong Kong 33 index over here. Okay, give me a minute. Let me. Yep. Okay, so what we could see over here is that today the price action managed to stage a bounce, and it managed to hit the first resistance level at 18,570 before pulling back as we speak. All right, so with this series of higher high and higher low, I'll be tightening slightly the key short-term pivotal support to this last Friday minor swing low area. Okay, let me highlight this. Okay, so that will be 18,060. All right, 18,060. Okay, so okay, 1 second. Let me adjust it nicely. Okay, this one I remove it. Okay, okay, so adjusting it slightly higher using 18,060 as my short-term pivotal support for today. Still maintain that short-term bullish bias, intraday bullish bias on the Hang Seng Index, which is the Hong Kong 33 index. The next resistance level to watch will be at 18,980 slash 19,210 level. Okay, close to the 20-day moving average, and as well as if you do the Fibo retracement. Okay, taking from the slide from 17th of May, oops, all the way up to last Friday's intraday low. Oops, give me a minute. I think it's not showing up. Okay, it's all close to the 61.8% and 50% Fibo retracement as well. Okay, this 18,980 slash 19,210. Only an hourly close below 18,060 today will invalidate today's short-term intraday bullish bias to see another round of minor corrective decline to expose the next near-term support at 17,600, which confluence with the 50-day moving average as well. A breakdown below 17,600 sees further weakness towards 17,170, which confluence with the 200-day moving average. Okay, that's for the Hong Kong 33. The German 30 or the German DAX, okay, it managed to dip a whipsaw yesterday, right at the 50-day moving average. Didn't have a clear break below 50-day moving average before bouncing up again. And where it bounces, right, it bounces close to this medium-term ascending trend line support that we draw on the daily time frame, right from the low of 18th of January 2023. Right, low. So with that, we will still be maintaining that short-term bullish bias, given yesterday's price action that managed to survive at the medium-term ascending trend line support, a bit of whipsaw here at the 50-day moving average. So I consider this yesterday, this move around the 18,405 pivotal support is a bit of whipsaw rather than a clear break below it, right, as expressed by the technical elements that I shared with you. So I'll be using yesterday's minor swing low as an access around this 18,340. Okay, the access over here, 405 slash 340. Still maintaining that short-term bearish, short-term bullish intraday outlook on the German 30 index or the German DAX. index. So first resistance to watch, right, before 18,680, which is the 20-day moving average. There's a slightly higher one on the highlight for today. Will be this level here. Okay, Tuesday, which is yesterday's push up during the Asia session before it collapsed during the European session. So this level here will be my first resistance to watch in today's intraday bullish buyers outlook. 18,565 above 18,565 exposes the next resistance at 18,680. We also confluencing with the 20-day moving average acting as a resistance as well. Only hourly close below 18,340 will invalidate today's short-term intraday bullish outlook on the Germany 30 to see extension towards this 18,000. Okay, let me remove this since this is critical, to see extension of the decline towards 18,175 level. Okay, that's the next support level to watch after 18,340 on the German 30. Now, the US stock indices, the Dow Jones Industrial, okay, give me a minute, sorry, it's a bit, the Dow Jones Industrial Average, which is the US Wall Street 30, managed to survive right exactly above the 38,190 short-term pivotal support level. Yesterday almost hit the first resistance at 38,800 before it starts to trade kind of a sideways, all right, over here during the close of the US session and even into today's Asia session as well. So with that, no change since it hasn't broken up above 38,800. We'll be still using 38,190 as my short-term pivotal support. So as long as this short-term pivotal support holds for today, we still maintain that short-term intraday bullish outlook on the US Wall Street 30. Above 38,800 sees the next resistance coming in at 38,970/39,130. next, which is also confluencing with the 20-day moving average, I think as a resistance as well. Only an hourly close below 38,190, a breakdown below this level, will invalidate today's short-term intraday bullish buyers to see potential further weakness towards the next support area at 37,890/37,750. A breakdown below it exposes the 19th of April minor swing low that is acting as a next near-term support at 37,380. The Nasdaq 100 continues to trade above that 20-day moving average, all right, clearly above the 50-day moving average, outperforming the US Wall Street 30 from a technical analysis perspective. Managed to hit the first resistance zone at the 18,720, 18,830 levels. It did surpass clearly this 18,830. So we will still use that 18,340 short-term pivotal support to maintain today's intraday bullish buyers on the US Nasdaq 100. Above 18,830 sees the next resistance coming in at 18,990/19,055. Only an hourly close below 18,340 will invalidate today's short-term intraday bullish buyers to kickstart another round of corrective decline, minor corrective decline scenario to play out, to expose the 50-day moving average, also confluencing with the next support level at 18,100. A breakdown below it exposes the former minor swing high area of 30th of April, now acting as a next support, near-term support at 17,810. All right, so that sum up the short-term intraday technical outlook on the major US indices that are still holding above their respective key short-term pivotal support levels. Okay, now back to that commodities over here. So the short-term technical outlook on that gold XAU/USD. So over here, if you look at XAU/USD, it managed to survive again at the 2,320 short-term pivotal support level that we highlighted. So still no change, still using this short-term pivotal support 2,320 to maintain that short-term intraday bullish buyers on gold XAU/USD. First resistance to watch will be around that 20-day moving average, which is this key range resistance at 2,360 that managed to prevent the bulls from breaking up higher since last Wednesday. So this will be the first resistance to watch. Only a breakout above 2,360 will see much more traction in terms of the bullish buyers to see the next near-term resistance coming in at 2,380. 2 level in the first step. Only an hourly close below 2,320 will invalidate today's short-term intraday bullish bias to kickstart another round of minor corrective decline. Next support level to watch will be 2,307, the minor swing low area of 9 of May. A break below it exposes the key medium-term support of 2,280, which is 3rd of May, minor swing low, and 1st of May. And as well as if you go to the daily time frame over here, you could see this ascending trend line that I drew from the low of 14th of February, now conferencing at 2,280 level as well. Okay, so net still maintain that short-term intraday bullish outlook on spot gold as long as the 2,320 short-term pivotal support holds. Then now let's move to the West Texas crude oil. So the West Texas crude oil yesterday we do have a bearish bias, so it almost came down and hit the support level at 72.36 level. So this 72.36 confluence with this area here. Okay, this area over here. And if you do the Fibo extension of this ongoing slide, okay, it's also close to the 2 times Fibo extension. Okay, over here at this point in time. So given the fact that this could be the wave 1, wave 2, and something like a wave 3 or what, so there could be a potential kind of a wave 4 corrective bounce taking shape. So the wave 4 corrective bounce after a very steep decline, okay, if you do the Fibo retracement over here, it could be at around the 50% Fibo retracement as a resistance. So net overall, right, given that the RSI has also exited from its oversold region over here at this point in time, and we could see the RSI by connecting the former lower high over here, it did a bullish breakout as well. Okay, lower high, breakout, retest, and bounce. Okay, so with this short-term positive technical element as being depicted on the hourly RSI and the Fibo extension coming close to the 7.236, which indicate to us this could be a terminal end of that wave 3, and now we could be to a potential corrective wave 4. We call it a wave sequence, corrective bounce sequence to play out. We'll be flipping to a short-term intraday bullish bias on the West Texas oil using 72.36 as a short-term pivotal support level. As long as this support level holds, near-term resistance to watch for that potential bounce, 75.85 for sure, which is the 50% Fibo retracement that I highlighted earlier. Let me draw again. Okay, 50% Fibo retracement, and as well as graphically, this former minor swing low of 13th of February and 16th of February turns into a pullback resistance level. A break above 75.85 potentially sees this key resistance at 76.70. Why is it key? Because this 76.70 was tested 2 times formally as a support, 3 times formally as a support on 15th of May, on 24th of May, and as well on 3rd of June before triggering off that steep decline in the last 3 sessions. So therefore, this is a key resistance in terms of its psychological price action behavior. However, an hourly close below 72.36 will invalidate this intraday bullish bias on the West Texas oil for that corrective bounce to see the continuation of this bearish impulsive down move to expose the next support area at 71.35, followed by 70 figure level, okay, which is the swing low area of 3rd of June. Okay, so that sum up for the short-term technical outlook on the various major cross assets. So before we go, let's take a look at the calendar. What are the key important data to look out for today? All right, so heading towards the European session, not much key data to watch except for the Eurozone PPI data. It's not really that key. That's up at 5 p.m. Singapore time. And closer towards the US session, this is something I want to highlight, is they call it the ADP employment change data. So this ADP employment change data is a job market data in US released on a monthly basis, but it's being compiled by ADP, which is a private human resource payroll provider. So it's more like a private organization compile job data compared to the non-farm payroll, which is the government agency compile. So this is something like a prelude to this Friday non-farm payroll data that market participants will be paying close attention to. So market is expecting also a weaker number. Previously it was at this 192k jobs added for the month of April. So this time around, it expected to be much uh, slower pace of jobs adding at 173k for May. So something to keep a lookout for at 8:15 p.m. Singapore time. Then thereafter, we have the all-important ISM services PMI data. So previously on earlier this week, we have the manufacturing PMI, which show weaker than expected. So for this time around, services PMI is much more important to the US economy. Why? Because close to 3/4 of US GDP growth is driven by services activity. So this is what the services PMI measures, all right? So it will be released at 10 p.m. Singapore time, 30 minutes after the opening of the US stock market. So market is expecting a recovery from 49.4, and within the subcomponent, I also do pay close attention to the prices in the prices paid. So this is considered as input prices or the cost of doing business for the services sector in US. So previously we do see 59.2. So market, there are those consensus, but the forecast given by Trading Economics is a further slight increase to 60. So if you look at the services paid over here, there's this trend that is generally increasing upwards after last month's sharp uptick move, all right, of 59.2. So if it going to increase today as increased today, later releasing at 10 p.m. Singapore time, as expected by the Trading Economic forecast number of 60, it could also imply that a bit of upside pressure in the services input cost in US. All right, so something important to watch out for in terms of that, whether that stagflationary scenario continues to play out in the US in the medium term. All right, so with that, that pretty much summed up for today's daily dose of market insights. Kelvin here signing off, and do have a great day ahead, and we shall speak again tomorrow. Thank you.